Welcome to the knowledge of ledger. Today we will discuss what is ledger, how to prepare ledger from the journal. First, we are going to see what is account. An account is a specific accounting record of increases and decreases in a particular asset, liability, or owner's equity item. That means it's a specific record of every items of financial statements. Now we are going to see what is ledger. The entire group of accounts maintained by a company is ledger. The objective of ledger is to organize and summarize the specific transactions listed in the journals. So, in ledger, we summarize the specific transactions. A ledger gathers all information, that means increase any types of increase or decrease of a specific account, and shows the account's current balance. So this is a very important definition of ledger. We can see a ledger collects or gathers all information regarding the increase and decrease of any specific account, and ultimately it shows the account's current balance. Now we are going to see what is posting. Transferring journal entries to ledger accounts is called posting. That means whenever you are transferring the journal to the ledger accounts is called posting. Now we are going to see how to prepare ledger. In the last video of accounting, I discussed how to prepare journal. So here we can see some journals which was prepared by me in the last video. So here we can see some journal entries. Here we can see cash accounts, owner's capital. So here these are the journals. From this journal I will prepare ledger. So from the theory of ledger we have learned that ledger is a collection of specific accounts increase and decrease. So here this is a journal book. From this journal we will prepare ledger. So since ledger is a collection of increase decrease of any specific account, here we can see cash is a account, owner's capital is another account, here van is a account, cash account is another account, supplies account, trade creditor account, trade debtor or accounts receivable account, service revenue account, advertising expense account, cash account, trade debtors account. So these are the journal entries prepared from the transactions. Now we will see how ledger is prepared. You can see here cash is account, okay? So we are going to see how to prepare the cash account, okay? So these are the ledger books. Here we can see cash accounts. So in cash accounts we will collect only the cash related accounts, okay, from the journal. Here we can see January 1 cash account debit. So since we are preparing the cash ledger, we will consider this account. Here cash account is debit with 20,000. So cash is debit. So we have written the 20,000 amount in the debit side, but we have written in the account title the opposite account. That means here cash is debit. We have written the amount in debit side, but in the account title we have written the opposite name or accounts or item. Clear? Here cash is debit, amount is written in the debit side, and account title is written which was in the opposite side, that means owner's capital. Okay, so this is done only for one transaction. Now we are going to find out another cash accounts. In January 2, there is another cash account in the credit side. Okay, so here cash is credit, no problem. So we will take this 5,000 credit amount in the credit column. Be careful, just we are considering the cash because we are preparing the cash accounts. Okay, so here cash is credit, no problem. We are writing this amount in the credit side, but here cash account is credit, but we will write the opposite account name. Here the opposite account name is van account. Here van is an asset. Okay, so cash is credit by 5,000, but we will retain the name in the opposite side, that means van account. Okay, now we are going to find out the next cash account. Here we can see in January 8 there is no cash account, and January 12 there is no cash account. In January 15 there is another cash account, but it is in the credit side, so no problem. We will write this 500 credit in the credit side, and we will retain the name in the opposite side. Here cash is credit, and in the opposite side we can see the advertising expense account. Okay, we are writing this in the advertising expense account. Now in January 21 we can see another cash account which is in the debit side. Okay, so cash is debit with 800. We are writing 800 in the debit side, and we are writing here 800 is debit with cash amount, and but the opposite name is trade debtor, that means account receivable account. So here trade debtor account is written in the account title. Okay, and the last one we can see January 30 there is another cash account which is in the credit side, 1,500. So cash is credit with 1,500, and we will write the opposite name owner's drawing account here. Okay, so shortly if we rewind the process of preparing ledger, here cash is debit, so we have written in the debit side amount, but account name is written in the opposite side, owner's capital here. Okay, cash account is written here. We will not write the cash here, but we will write the opposite name. Okay, so in January 2 cash is credit with 5,000. We have written 5,000 in credit side, but the name was van account. Here the name was van account. Okay, and another cash is found here. Cash account is credit 500. We have written in the credit side. 500 with the name advertising expense. Here cash account is debit with 800. We have written 800 here, and the opposite name is trade debtor, that means accounts receivable account here. Okay, and the last one is cash is credit. We have written 1,500 in the credit side, and the opposite name is owner's drawing account. So now we can see we have written this amount: January 1, January 2, January 15, 21, and 30, debit and credit. Here we know cash is a debit account, and the balance, since cash is debit, the last balance will be debit. Okay, so here 20,000 is debit. We have written in the balance column 20,000, but here 5,000 is credit. So cash is always debit. If there is a credit option, we should consider that there is a decrease. When there is a decrease in cash account, it will be written in credit side. That means here 5,000 is a credit amount, which shows that cash has been decreased by any account. That means here ban account 5,000 has been credited with the name of ban account. So we have to deduct this 5,000 from 20,000. So if we deduct 5,000 from 20,000, we will get 15,000, and again we can see 500 credit. Here cash account is debit, but 500 is credit. That means cash has decreased. So we have to deduct this 500 from the 15,000. So if we deduct this 500 from 15,000, we will get 14,500. Okay, so here another we can see 800 is debit, so cash is debit. Here 800 is debit, that means been cash has increased. So if we add this 800 with this 14,500, we will get 15,300. And here another, we can see there is a decrease in the credit. That means cash account is credit, so that means cash has decreased 1,500. So we will deduct this 1,500 from the 15,300. So the ultimate amount is 13,800. That means this is the ultimate balance of cash accounts. Since cash is debit, so this 13,800 balance will be debit balance. So we have to keep in mind that here the cash account is debit, the balance 13,800. This is the ultimate balance 13,800. This is a debit balance. We should keep in mind because we will need this information while we are preparing the trial balance. Okay, so the last word is cash has a debit balance with 13,800. Okay, so we need to see this is one example of cash accounts. So by following this process, we will prepare every accounts. Okay, so let's see another example here. Here cash account we have already prepared. Now we can see owner's capital. So here there is another ledger account, owner's capital accounts. Okay, so here owner's capital is credit. We have written the 20,000 in credit side, but we will write the opposite name. Here owner's capital is credit. In the credit side we have written 20,000, and in the opposite name is cash account. We have written here the cash accounts. That means we are preparing the owner's capital account. Owner's capital here is credit, so we have written the amount is credit side, but we have written the opposite name in the accounts title. Okay, another example, here we can see Ben accounts. Here Ben is debit with 5,000, so we have written the 5,000 in debit side, and the opposite name is cash account. We have written the cash account in the account title. That means this is the process. And balance, since there is no another amount of credit debit card, this is only one balance, so this is the ultimate balance of owner's capital accounts with 20,000. We know owner's capital is a credit account, so here the balance 20,000 is a credit balance. Okay, Ben account is an asset account. Asset is debit, Ben is debit, so here we can see there is a balance of 5,000. So this is a debit balance because balance account is debit. So the debit balance, here the balance 5,000 is also debit balance. In such way, we will prepare every accounts. Here we can see supplies accounts. We will follow the same process we have done here to prepare the ban account, supplies account, trade debtor accounts, advertising expense account. Here trade debtor accounts. So only one trade debtor accounts we should prepare, and owner's drawing account. By following the same method, we have to prepare every account, and that is called ledger. If you have any query, you can ask me in the comment box. Thank you.